Good morning. It's good to be back. Today I would like to discuss the euro dollar. Since the last time I spoke, the single currency, as you can see from the daily chart, has risen strongly from November's 15-week low at 115.54 to 119.61. And since then, it has paired the November's gain on the back of rising U.S. Treasury yields, and as well as the optimism on the U.S. Tax reform. This week, I think that we're going to see further choppy sideways trading ahead of the key Friday's non-farm U.S. payrolls. On the daily chart, it looks like the volatile price action from 119.61 to 118.09 is unfolding into a triangle. So triangle in technical terms is a continuation pattern. So what this means is that the early up move from 115.54 is likely to resume after current choppy consolidation is over. Let's look at the broader picture. You can see that the correction from September's 2.5-year high at 120.93, it looks to me it has ended at 115.54. So if the Friday's payrolls is not overly strong, I think that the support at 118.09 will continue to hold, and the euro will continue the up move to the next target at 120 even. That's the first psychological barrier. Once we can take the price higher above the 120, then we can expect a retest of 120.93 in the coming days. So buying the dips would be the recommendation for the week, and then with a stop loss below 118 figure. As you can see, the retracement that I've drawn, if we close below 118 figure, then the risk would shift to the downside for a strong retracement of the entire rise from 115.54. Then the natural 50% pullback of this move will pressure the euro to 117.57. But I think that the support at 117.14 would continue to hold from here. So that's my take on the euro. Buying on dips, and initial target would be 120 even. Stop loss 118 figure. Now quickly onto the medium-term outlook for the euro. Probably we're looking well ahead into the first quarter of 2018. On the daily chart, you can see that the euro has made a major bottom at the beginning of last year, 2017, at 103.41. So that's a near 14-year trough for the euro. And then since then, it has rallied strongly to 120.93 in September. And if my forecast is correct, the pullback to 115.15 marks the terminus of this correction. So the euro, you can see that the current price is above the fast and slow moving averages. Actually, it's a 21-week and a 55-week moving averages, and so this means that the underlying strength of the euro remains pretty strong. So I expect price to retest 120.93. I think this will happen before the end of the month, and then once we can break above 120.93, the next projected upside target is 123, and Having said that, you can see that the weekly technical indicators are displaying what I call bearish divergences. You can see from the MACD. So that means that we're not going to see a major resumption of uptrend in the first quarter. So I think that 125 is most likely a psychological barrier on the euro would cap the upside in the first quarter of 2018. So recommendations to buy the euro on dips, and then with a stop loss, which is quite easy, below the reaction low at 115.54. So buy the dips, target 123, stop 115.50. So this is my take on the medium-term outlook for the euro dollar. Good luck.